So we are going to get started. Okay, today's webinar is going to be presented by Derrin Watson and Tim McCutcheon. Derrin Watson is an ERISA attorney and pension educator in solo practice in Santa Barbara, California. He received his bachelor's degree in accounting from BYU in 1980 and a law degree from UCLA Law School. He is the author of Who's the Employer? A Guide to Employee and Aggregation Issues Affecting Qualified Plans, with its 7th edition now just released this year exclusively on ERISApedia.com. He is also the senior editor of the Journal of Pension Benefits and is of counsel to the Forensic Benefits Law Center. His varied experiences range from doing stand-up comedy, yes, even about ERISA, to serving as a Mormon missionary in Iran, to editing and writing books and newsletters on a variety of topics. Tim McCutcheon, who will be joining Derrin, is the publisher of ERISApedia.com and is the president of Vermont Compliance Labs. Tim is also the founder of ftwilliam.com, the most innovative document and government forms provider in the industry. He wrote the first web-based 5500 forms package and introduced the first retirement plan document e-sign system. Tim is a member of the IRS Great Lakes TEGE Council and a former member of the Information Reporting Program Advisory Committee of the IRS. Prior to founding ERISApedia.com and ftwilliam.com, Tim's law practice included counseling TPAs, financial service companies, and other benefit providers regarding qualified plan product design and compliance. Tim received his JD cum laude from University of Wisconsin-Madison. He's also a CPA and holds an MBA degree from the Kellogg School of Management at Northwestern University. I'm Chuck Gouge. I'm going to be facilitating this conference call today, this webinar, and Joanne Pacina will be helping by moderating the question board. Derrin will try to answer most of the questions directly, but if you have a question relating to functionality, or you can't find something or miss something, or you want a follow-up, Joanne will try to respond to you directly. So as you probably know by now, your lines have been muted, but the question board should be available on your GoToMeeting dashboard. So please feel free to send in questions during the conference via that question pull-down menu. We'll answer as many as we can during the conference, and anything that we don't get to will be responded to after the conference directly to your email. You can also send in follow-up questions and or comments to support@erisapedia.com. So let's get started. Take it away, Derrin.
Ladies and gents, greetings, welcome. Thank you all for joining us. Delighted that you're here. We'll talk quickly about the changes in the 2016 form. There aren't a lot of them, and we'll spend the bulk of the time looking at the proposal that's on the books for the next generation of Form 5500. There will also be a voluntary demonstration after the presentation, and I hope you'll stick around for it. 2016 changes. The headline here: the late filing penalty for the Department of Labor is now up to $2,063 a day. That's up from $1,000 that's in the statute. Inflation is a wonderful thing. Now, the important thing is almost nobody pays that penalty. If you're filing late, you go under the Delinquent Filer Voluntary Compliance Program. And the fees there, $10 a day up to $750 for a small plan, $2,000 for a large plan, those fees have not changed. So it's only the potential, oh my gosh, penalty if you don't go under delinquent filing that is scarier than ever before. There is a question, you can see it down at the bottom of the screen, that has recently been added. If you're all right, if you're a defined benefit plan, are you covered by PBGC? Yes, no, gee, I don't know. And if you answer yes, then they want proof that you have, in fact, paid your premium. For your electronic premium payment. If you are filing an SB, there are so for the actuaries, there are changes there related to cooperative and multiple employer plans. On Form 5500 EZ, there is a new box D that hasn't been there before. And this is for the IRS delinquent filer program that they came up with specifically for 5500 EZ. This is not the DOL's program, it's the IRS program, and now they have a checkbox to indicate that that's what you're filing under. The DOL program, I said $750, maximum number of penalties, 2 years worth. For the IRS, it's $500 a year, but same $1,500 maximum, 3 years. There have been, since 2015, a whole bunch of compliance questions. Included among the compliance questions is the instruction that filling in the preparer information on the bottom of the form, the 5500, the 5500 SF, is mandatory. The instructions came out saying, don't answer any of these questions. So don't fill in the paid preparer information. Don't answer the compliance questions. What you are seeing here is a screenshot taken from the IRS webpage listing the questions that you are not to answer. The IRS has had difficulty getting these questions through the Office of Management and Budget, and so much so, in fact, that they have removed them from the 2017 form. So they've appeared on 2015, 2016. We have been instructed not to answer them for those years, and I would definitely follow that instruction. And then for 2017, they've just said, no, let's not do it. Let's wait for the next generation. So the idea is, okay, we're off for now, but we may come back with these when we next update the form, and that's the major topic that we're going to go into here. It should be noted that the IRS between 2015 and 2016 improved the questions. They made them less ambiguous. They handled some situations that hadn't been well handled before. Take a look, just real quickly, take a look on the screen at question 16A at the top. At the 3 questions at the top are the questions as they appear on the 2015 return. The 2 questions at the bottom are how they appear on the 2016. This is the 5500 SF. On the 2015 version at the top, check the box to indicate the method used by the plan to satisfy the coverage requirements under 410B. Well, that's fine if you've got a profit-sharing plan, all right? We're using the ratio percentage test or the average benefit test, but if you have a 401k plan and you have deferrals, match, and non-elective, you're running 3 different coverage tests, and one of them might well pass ratio percentage, and another might well need to use the average benefit test. And so now when you get down to 16A for 2016, the bottom one, they ask the same question, but they add check all that apply. So they have a recognition that you might have multiple answers to the question, and now they've included a very important box, not applicable. How would not applicable come up? Well, suppose you have a plan with no highly compensated employees at all. Well, yes, in fact, it is exempt from the ratio percentage test. And not applicable to apply. The most important case where you'd have not applicable would be where you'd had a merger, acquisition, change in control group that gave rise to the coverage transition rule. Not applicable would apply, and now we have a checkbox for it. They have improved the questions. They have listened to us as ASPA and others have made suggestions. And so we can hope that this process will continue on as we look at the next version of the form. Now, this proposal was made for 2019 returns that we would be filing in 2020 for the 2019 plan year. At this point, that date has to be viewed as awfully optimistic. But it is consistent with the pattern that the Department of Labor has been doing for years. In 1999, we got the first version of EFAST, which, as far as I'm concerned, consisted of two lies. The E was for electronic, and back in 99, 2000, very, very few people were filing electronically. And, well, nobody's going to pretend that this is fast. In 2009, we got EFAST 2, where they finally mandated electronic filing. Well, they wanted the next generation to come out in 2019. But getting to this point is a lengthy process. It is anything but simple, and there's a great deal involved. So the proposals that we're going to talk about here came out last year in 2016. They've sat there, at least administratively, they've sat there since then. Among the reasons they have sat is that we have been without political leadership at the Employee Benefit Security Administration. In fact, while we recently got a Secretary of Labor, just recently got a Secretary of Labor, we are still without political leadership at the Employee Benefit Security Administration. And it is, once we go through this and we talk about the things that they are planning to add to the form, I think you'll be able to see why a more business-friendly EBSA and Department of Labor might not want to ask all the questions that the prior administration proposed. That being said, there are some needs that have to be addressed. There are things that the agencies want to do, and I should say it is not just the Department of Labor. This is the DOL, the IRS, and the PBGC. This is a proposal of all three agencies. And there's some things that, because of changes in the law, because of things that they've learned, because of their use of the forms, because of changes in business climate, because of changes in what retirement plans are investing in, they have wanted to ask for some time, and now they think is their chance to do it. One of the reasons for these 10-year cycles in major amendments is the Department of Labor has contracted with a third-party firm to process the 5500s, to generate a website, to do all the things that we see in connection with the eFast filing program. They don't do it themselves. They have a third-party contractor do it. Well, in order to begin bidding on the process, they need to know what the form is going to look like. They need to be able to tell the third parties who will be administering this what it is they're getting in for if they put in their bid. And they are proposing sweeping changes to the form. So the first step in the process is to pin down what it is they're going to be asking and how it is they're going to be asking it. Then once they have that, then they can put the job out for bid and select a contractor and move forward from there. But this is a process that is going to take a while. And the fact that, although this was proposed last year, it's still sitting here this year suggests that it may not hit the targets that they have put forward. The proposal itself is 777 pages long. I've wondered at times if 666 is the sign of the evil one, if 777 is supposed to take you to heaven. I don't know. But the proposal is on the DOL's website. It outlines all of the questions they want to ask. Now, what they do not have, and I wish I could show you, but it doesn't exist, what they do not have are model forms. They haven't taken the trouble to put all this on a piece of paper so that we can review it and see how this stacks up. Actually, I think there's good reason for that choice on their part, because it's entirely possible they'll make radical changes to this, or the Office of Management and Budget will say, gee, this really goes beyond your mandate. You are requiring people to spend time and trouble to answer this question, and it goes beyond what you should be asking. They realize that possibility exists, and so they are not sitting back and designing the forms. But what they are doing is showing the questions, and if you go through those 777 pages, you'll find not only here's the question, but this is a new question that we haven't asked before. This is bringing it back from the forms in the 1970s. This is a question that we've moved from somewhere else, so you can get a feel for where it fits in to their overall plans. They also discuss why they're doing what they're doing, and they give us their proposed instructions as well. So it's all laid out for us in that sense. Then there's a separate document, 123 pages, of proposed regulations to implement the changes that they are proposing. The regulations drive the forms, but for the most part, that's a technicality. The real thing you're looking for is the proposed revision itself. If you want it, it's on the EVSA website, and you look for the Form 5500 Improvement and Modernization Proposal, and that's where you can find it. From the last Assistant Secretary of Labor, head of EBSA, Phyllis Borsey, the 5500 is in serious need of updates to continue to keep pace with changing conditions in the employee benefit plan and financial sector markets. So that's what's driving this. They have 5 different objectives in making the changes. First off, they want to modernize the financial statements and investment information filed about employee benefit plans. The list of assets in Schedule H has not really been updated since the 70s, but the investments plans are in have changed mightily. You have derivatives, you have hedge funds, you have publicly traded limited partnerships, you have precious metals in some cases, you have participants in participant-directed brokerage accounts, which were not even dreamed of years ago, and they really, the DOL is finding themselves with a ton of assets listed on another line. They want to have specific lines so that they know what's going on in the plan. So so that's the goal here on modernizing the financial statements. Updating the reporting requirements for service provider fee and expense information. That is all right, that's Schedule C. Schedule C came in 2009, and the service provider fee disclosure rules started in 2012. The two mesh only imperfectly. There are a bunch of differences between the two. And the DOL is trying to make them mesh more perfectly. I think it's a good move. They want to enhance the accessibility and usability of data filed on the forms. Among the most common mistakes people make when filing Form 5500 are filling in the codes on line 8 or line 9. Is this a 401k plan? Is the code 2J, for example. It is amazing how many people mess that up. We're still, this is supposed to be a disclosure document accessible by participants. Is there a participant who's going to be able to look at line 2J, a code 2J, and say, oh, this is a 401k feature? Of course not. So what they're planning to do is replace those codes with checkboxes. Well, and hopefully not only make it more accessible, but get more correct answers from employers. I think there's a great deal of sense there to that particular approach, but it will, can you imagine how long that list of checkboxes is going to be? It's potentially huge. Somebody is asking, 2K is used for safe harbor match. Yes. No, 2K is used for matching contributions altogether. So 2J is there's a 401k feature in the plan. 2K is that there's a 401m feature in the plan, and that would be used for matching contributions. Whoever designed the codes, okay, strong comment. This is Derrin. This is not a Recipedia. Had a pen in one hand and a bottle in the other. I have difficulty figuring out why they made some of the choices they made. Enhancing accessibility, one of the other things that they specifically want to do is make it easier to data mine the forms. So in other words, so that you can use computer software to pull off information from the forms. Frankly, that makes it easier for journalists, that makes it easier for academics, and it also makes it easier for plaintiffs' law firms. Um, they, there's a question about the existing forms. Do you use a 2K or let's say 2M? Well, let's keep it 2K for the match. Suppose it's a discretionary match and you don't make a matching contribution for the year. Do you put down code 2K? The instructions are not clear on this point. My answer, if you have the feature in the plan, put in the code, that facilitates using the same answer year after year after year. I would put in 2K saying that there's a matching contribution if we had the feature in the document, regardless of whether the contribution was made. Require reporting by all group health plans covered by Title I of ERISA. The DOL has a problem. Under the healthcare law passed in 2010, they have the duty to provide certain statistical information to Congress. And they have no means of getting that information. Why? Because small health plans with fewer than 100 participants that are unfunded, fully insured, or a combination of both don't even have to file. They are exempt from filing. Large plans, unfunded, fully insured, or a combination of both, need to file and would attach a Schedule A if they happen to be insured, but if they're self-insured, there wouldn't be any attachments at all. So they are missing key financial data. They want to have a new Schedule J that will be specific for health plans that would enable them to get the data that Congress requires them to provide. The interesting thing about this particular requirement is that the DOL anticipates that it will add 2 million returns annually. 2 million health plans that are not now filing will be filing if this comes through. But of course, the health law on which this is based is also up for grabs in Congress at the moment. So it will be interesting to see how this one comes up. Finally, they want to improve compliance under ERISA and the code through new questions regarding plan operations, service provider arrangements, and financial management of the plan. All of the questions that are the compliance questions that are on the 2015 return, they proposed here for 2019. They propose some major changes with regard to small plans. 5500 SF will continue to be there, but Schedule I they propose to disappear. In other words, if you don't qualify to file a 5500 SF, you will have to file a Schedule H and a Schedule C. Now, they have kept the small plan audit exemption. So so I've got a small plan that has some real estate in it. I don't qualify to file an SF. I'm going to have to file a full Schedule H, but if it's a small plan, I don't need to attach an audit, assuming that I comply with the existing small plan audit exemption. But they are making one wonderful change in connection with this. They are changing the definition of what is a small plan in the defined contribution marketplace. For defined contribution plans, a small plan has fewer than 100 participants with account balances. So suppose I have a 403B plan with 200 people eligible to defer and only one of them defers. or not, is 75 of them defer, but you have 200 eligible to defer. Today, that 403B plan has to file, and it files as a large plan, and it attaches an audit. Under this proposal, if there are only 75 deferring, only 75 with account balances, they would file as a small plan, and they would not need to attach an audit. So to me, that's probably the most exciting change that they are proposing. They have a ton of new things they want to add. Throughout the forms, there's a new critter, a new identifying number, the legal entity ID. This is an identifying number that would be important to an international company, because you would be able to use the same ID number in whatever country you're doing business in. That's something that is possibly coming in the future. Group health plans would be forbidden from filing a 5500 SF because they would the Department of Labor wants them to file the full form with the Schedule J. We'll talk about additional participant data and the information on terminations and transfers. As I said, they're getting rid of the codes, replacing it with checkboxes. Well, that's going to add a great deal, but they have many new questions. All right, so these would have been codes. Now these are going to be checkboxes. Is this a safe harbor 401k plan? What kind of safe harbor is it? Simple, QACA? Do you have a Roth feature? Do you provide participants with financial education or advice? Either one. Do you have a qualified default investment alternative, Equidia? If so, what kind? Is it a target date fund, fixed income, professionally managed, some other default investment? Is this a ROBS arrangement, a rollover as business startup? I don't know how a ROBS files a 5500 SF, because an SF can't own employer stock. But that's on the proposed SF and on the proposed 5500 itself. A question, and it's a fairly important one, is the number of participants with account balances based on whether they had account balances at the beginning of the year? The answer is yes. It's still the same beginning of year number as it is now, except it's that changing to those with account balances. Do you think the change to only require audit for those with over account balances will cause some coercion on the part of employers close to this to dissuade some participants from participating? Golly, I hope not. Is that type of coercion is the type of thing that A, would get you disqualified. 401k4 prohibits it. Prohibits the employer from doing anything other than a match to either encourage or discourage deferrals. So there's that. The IRS, in fact, audits for that very issue. But you know, will there be some bad actor somewhere in the country? Doubtless. And will a hyperactive reporter from some financial publication pick up on it and say, oh, isn't this awful? Probably. But nonetheless, I don't see that as being something that tremendously worries me there. A question here. There is a concern about identity theft with regard to employer ID numbers, and so posting those online, I'm afraid that's not going to change. I do not see a change on that point. Is there concern about identity theft, yes, but most of the concern is focused on Social Security numbers, not on employer ID numbers. The participant data that we're looking to see, total number of participants beginning and end of the year, the same type of participant data that we see now on the full 5,500. But then there's a new question for defined contribution plan participants with account balances at the beginning and at the end of the year, the number of participants who made contributions during the year, and the number of participants that terminated employment and have their entire account balance distributed as of the end of the year. Is there any chance they're going to increase the cash out limit from $5,000? That's going to take an act of Congress, and I don't think it's on Congress's radar. I really like this question. This proposed question on the 5500 SF is asking about specific assets. Do you have these assets in your plan? Well, the thing I like about it is people over the years, since the SF was introduced, have questioned whether a plan could own a pooled separate account, for example, and still file an SF. The fact that they have that on this list says, yes, you can. You can own a pooled separate account. You can own a common collective trust. You can have the investments listed on here, and these are all things that they anticipate you would be able to file a 5500 SF. Among the new compliance questions, in addition to those appearing on the 2015 return, is this a participant-directed plan subject to participant fee disclosure? Yes or no? If yes, did you provide the participant fee disclosure? Well, the answer to that one had better be yes. And if yes, attach the comparative chart of investments. Did I mention data mining by plaintiffs' law firms? If you answered yes, how many designated investment alternatives were made available, and what type were they? Did you make available to participants and beneficiaries a designated investment manager, a DIM? You know, we have a lot of acronyms in this business. We truly do. And of all the acronyms that exist, I am thrilled not to be a DIM investment manager. If you answered yes to participant direction, did you make available to participants self-directed brokerage accounts? Oh, really? Then how many people use them? This is a far more intensive look than we've had in the past. There's a question relating to, has the entire account balance been distributed? Suppose there's a forfeiture that comes later. I don't think that would prohibit you from listing someone as having had the entire account balance distributed. The unrelated business tax income question was on the 2015 return. It was taken off of 2016. They want it in 2019. Did the employer pay plan expenses? You know, we've never cared about this in the past. If the employer wants to overpay for plan expenses, let it. But now they're asking the question. Does an ERISA Section 411 disqualified person serve in the plan? ERISA 411 lets a court say you will never be a trustee of an ERISA plan ever again. Well, this is asking, is one of these people involved in the plan somehow? So I guess you now need to ask people the question. Did the plan sponsor serve the plan for direct or indirect compensation? If the answer is yes, it is very likely resulting in a prohibited transaction. Have service providers been fired for failure to comply with ERISA. That's a big one, and if the answer is yes, tell us who, their address, their employer ID number, why you canned them, and check this box if the reason you kicked them out was their failure to provide the service provider fee disclosures. Does your summary plan description comply with the rules? Well, if the answer is no, look forward to a DOL investigation. Of course your SPD complies with the regulations. The answer to that is always going to be yes. And then you let the IRS, the DOL come in and say, no, it doesn't. This one's interesting. Were there any encashed checks? If yes, how many? What was their total value? Describe the procedures followed by the plan to verify a participant's address before a check was mailed. Describe the procedures followed by the plan to monitor uncashed checks, including steps to locate missing participants. I am hopeful that if we get large enough numbers in response to this question, the DOL will give people some authoritative guidance on what to do with uncashed checks. We really don't have that. Oh, how much did you make in hardship distributions, assuming this is a 401k plan? Is the plan frozen? There would be questions on transfers in and out, and these would be perpetual questions. So suppose I have, and this would not only be on the SF, it would also be on the Schedule H. So suppose I have a plan and I spun off a part of the plan. Somebody bought part of the business, we give them the assets, we give them the participants, and we transfer over the money from the plan. You would show the transfer out. We show what plan it went into, its plan number, the employer name, the plan number. That information would be there, and let's suppose this happened in the year 2020. So it would be on the 2020 return, but it would also appear on the 2021 return and the 2022 and the 2023. In other words, this would be a running list of the transfers out, and there would be a corresponding list of transfers in. Intriguing. And then there's this question. Let me get there. Did the plan, as part of the procedures for terminating the plan, transfer plan assets to interest-bearing federally insured bank accounts in the name of missing participants? I think that question is too narrowly worded. I would like to see it expanded to include all default rollover transactions, particularly on plan termination, so that people could find the final return and have some idea of where their money went. I think that would be intriguing. They propose major revisions to Schedule H. They're completely overhauling line 1 and the assets listed there. Their goal is to get things out of the other line. The schedules that are attached to Schedule H will include investment information in common collective trusts and pooled separate accounts. Currently, that information appears on Schedule D. The supporting schedules will be part of the electronic form and will be searchable. Now, I've gone through, I prepared a spreadsheet listing the assets that they have on line one. And, they have subcategories. So let's take debt instruments and obligations. That's a subcategory of general investments. And they would break it down into U.S. government securities, other government securities, so state government, corporate debt investments, and that in turn would be broken down into investment grade and high yield and so forth. So the purpose of this sheet is to show you the breakdowns. Well, what I want you to notice are the things that are bold-faced. The stuff that is in bold is not on the current 5500. And just go with me. It takes 4 screens to show you all this. But these are new entries that have not appeared in the last 20 years. Obviously, much more information with regard to assets in the plan. I think over half of the lines would be new entries. And of course, all of this new information on line 1 will mandate new information on line 2, on the income and expense lines. So there are new income categories related to all of the new assets that are listed on the first one. Included in the expense information, there would be a separate line for direct rollovers. Again, hardship distributions, there would be a separate line. This one is too narrow. Distributions to employees who have attained age 62 and who are not separated from service when the distributions were made from a defined benefit or a money purchase plan. There are pension plans with retirement ages younger than 62, but they have a very narrowly focused question there. New categories of administrative expenses. Let me see there. Included in those new categories, salaries and allowances, IQPA audit fees, so the independent auditor auditing fees, record keeping and other accounting fees, bank or trust company custodial fees or trustee fees, actuarial fees, legal fees, valuation and appraisal fees, trustee fees and expenses, other administrative expenses. So way more granular detail on the expenses in the plan. With regard to administrative expenses, the total paid by the plan, the total paid charged directly against participant accounts, how did you allocate it against the participant accounts? Again, much more information. The audit information on the current Schedule H is just has a few questions. They want to vastly expand the questions relating to the audit. Identify the state in which the opinion was issued. Did you discuss the report with the accountant? Yes or no? Well, that sounds like an easy enough question, but if the answer is yes, did the accountant advise you whether the report, including the financial statements and notes, it disclosed any of the following: errors or irregularities, illegal acts. And if the auditor tells you you have some illegal acts in the plan, and you check that box, do you think that that might raise your audit profile? Material internal control weaknesses. Boy, there's another audit flag. A loss contingency indicating assets are impaired or liability incurred. That the plan sponsor may not be a going concern. That there are unusual or infrequent events happening after the close that might affect the financial statements. And my favorite one, the existence of plan qualification issues pursuant to the Internal Revenue Code. Boy, so my auditor has advised me that I have a potentially disqualified plan. Can you see how that might possibly trigger an audit? Was it peer reviewed? If so, what state was the peer reviewer in? How many returns do they prepare? Are they peer reviewed themselves? Right now, there are two checkboxes for the audit isn't attached because one of them is there's a short plan year, and we'll attach it next year. The second one is it's a common collective trust, master trust, and or pooled separate account. They're already heavily audited. They don't need to be audited again. Those questions are still there. With the elimination of Schedule I, the small plan audit question is now on the list. And there's a new line item. The report was not completed in time. If you check this box, you must explain the reason for the failure to comply with the audit requirement in a timely fashion and indicate a date by which the amended filing will be made with the report. Now, the proposed instructions warn checking this box doesn't mean that the DOL isn't going to hit you with a 45-day letter demanding the audit, or we will reject the return and start imposing penalties. But my thought is, look, we're real close to filing. We should have it by November 15. We'll amend the return in the next month and give it to you. Hopefully, and I don't know this for sure, hopefully the DOL keeps their shirt on and doesn't come after you for that. Question. Brokerage accounts are obviously problematic when it's the only offering. Sounds like under the proposed regime they won't work at all. You know, this was an issue that the DOL identified. They got a lot of pushback from that in connection with the service provider fee disclosure arrangements. But the DOL is certainly suspicious of brokerage account only plans. And yes, you are very clearly making known to the world with this filing that that's what you have when you say, oh, we don't have any designated investment alternatives. You are putting a set of breadcrumbs to lead an investigator to your plan. And it is a concern that would affect my willingness to do that as a plan design. Is the DOL considering how much time? You know, I've done this presentation for a live audience, and I have asked, how many of you think your fees will go up as a result of this? Every hand in the room goes up. Of course, people's fees are going to go up. Of course, there's more time, and the DOL, they're good at this. These people have been doing it for a while. They've said the benefits we derive from having this information will outweigh the costs. Of course, one of those costs is, as we raise people's fees, there will be people who will say, gee, I don't really want to sponsor a plan. But is that something that they have looked at, that they have talked about? Oh, yes, they have. And they've concluded, gee, your pain is worth it to us. Was Derrin's comment that you do not do or do not include safe harbor match in regards to 401M for code 2K? Code 2K includes matching contributions. It includes safe harbor match. It includes non-safe harbor match. If you have a matching contribution, you're putting down Code 2K, safe harbor or not. Is the peer review question directed as to whether the plan filing the 5500 was peer reviewed, or if the auditor performing the audit was a peer reviewer? It is directed to, as I read it, whether the plan itself, the audit itself, pardon me, was peer reviewed. How do these changes affect multiple employer plans? There is no specific proposal here to change the DOL's view on multiple employer plans. There is a bill in Congress that would allow multiple employer plans to file a single 5500, but that has to pass Congress. There is no proposal to change the DOL's view of it here on the 5500. Were all plan assets valued annually? Do you have things subject to repos? Right now, Part 3 of Schedule C deals with have you changed the auditor auditing your Schedule H or the actuary certifying your Schedule B? That question is being moved to Schedule H, because they are redesigning Schedule C, and there's really not a good place for it there. The new information on transfers in and out would be on Schedule H, the perpetual questions. They want you to identify the trust and include the name, employer ID number, trustee name, and phone number, and actually have the signature of the trustee on the Schedule H, further complicating the process of getting things filed. They have a raft of new questions for Schedule R. Do we need to get a new employer ID number for every plan still? Every trust certainly needs to have an employer ID number, and the plan administrator should have an employer ID number. I would have an employer ID number for the plan. Included on Schedule R, if this is a defined benefit plan, did you comply with the minimum participation rules of 41826? If this is a defined contribution plan, how many people are participating in the plan? For both non-elective and matching contributions, they essentially want you to lay out what your non-elective and your matching contribution formulas are. Do you have default deferral provisions? Do you have auto escalation? If so, what's the maximum limit on your auto escalation? How many people have not made investment elections and are therefore being defaulted into QUIDIAs? How many participants are making catch-ups? I have no idea what they do with that question. How many participants are making catch-ups? I said they're revising Schedule C. The good news is they're going to make it fit better with the service provider fee disclosures. Only covered service providers that have to provide the service provider fee disclosures would be listed on a Schedule C. So, for example, you're not going to be listing companies that provide management services to mutual funds, investment management to mutual funds. But they're taking out the exemption for eligible indirect compensation, and they're proposing to make Schedule C a multiple submission form like Schedule A. In other words, there would be a separate Schedule C for every service provider. With new questions with regard to record-keeping expenses, The information there being things you get from the service provider fee disclosures. Schedule E will be coming back. E is for ESOPs. That's good enough for me. Schedule E would be returning. Schedule D would be limited to pooled separate accounts, common collective trusts, direct filing entities themselves. The part one of Schedule D that plans fill out would be gone. That information would appear on Schedule H. There's one other good piece of news. They want to let people file Form 5558 electronically. It isn't there now, but here's the proposal people have asked me for years. You would be able, if this goes through, you'll be able to file your 5558 extension request electronically. Yay! They are also talking about having an electronic version of 5500 EZ. You know, something we already have an electronic version of 5500 EZ. It's called 5500 SF. You check the one participant box and the SF turns into an EZ. It's the same questions in the same order. They black out the questions that aren't on the EZ. But they find only 15% of EZ eligible returns are filing on the SF. They'd really like you to file electronically because it's easier for them to process. There are obviously the new rules for health plans with the new Schedule J. If you have a small, fully insured plans, you'd be exempt from many things. The large plans that are unfunded, fully insured, or a combination of both would be exempt from filing the service provider disclosures and would be exempt from filing Schedule G. On the 5500, they want more information with regard to health benefits, breaking down the benefits you would be providing. Let me see a couple of last questions. Are the perpetual questions retroactive? As I read them, no. They would start in 2019. And that, I think, answers the substantive questions that are there. Let me just mention, we're going to be getting you your continuing education certification. And if you have questions, contact us, support@ERISApedia.com. If I can be of service to you, I deal with anything dealing with retirement plans, but I also particularly deal with control group, affiliated service group, who's the employer type stuff. I used to be with a large company, you all know the name, and now I'm on my own. Here's how you reach me, and I'd be delighted to be of service. And my friends at ERISApedia, where you can find the new Who's the Employer e-source, the 7th edition of my book, are available there, and I'm going to turn it back over to them.
Thanks, Derrin. Thank you all for attending as well. We're going to stay online here for a few more minutes for anybody who'd be interested in seeing a quick demo. We're going to show how Derrin's 7th edition now looks like on our platform, and then show a little bit about our 5500 prepares e-source that we have on our platform as well. So hang on just a second. We're going to transition presenters, and I'll get into that quick demo for you. Okay, so I am going to log in real quick to ERISApedia.com. My ID opens up everything, so I'm going to try to just kind of quickly show you a couple key things. Here's Derrin's 7th edition title of Who's the Employer e-source. It is a 25-chapter book plus a little introduction and an appendix with some various things in it I'll give you a glimpse of. Just a couple of really nice things now, I think, that on our platform that allow us to do with this content. It's still in the question and answer format, and you can open it like a book. Just go to a chapter and then pick a question, and it scrolls to that specific question. You'll notice that there are a lot of hyperlinks to code and regulations. There's even hyperlinks to other chapters or other questions that you can click on and go directly to. It just opens up another tab. You can toggle back and forth between the chapter you were in and the new tab. And a really nice thing is if there has been an article written in Benefits Link, one of his posts in Benefits Link, you can link directly to it from the content. So that hyperlink to that Benefits Link article is just a click away, and then it opens up another browser page and you can read the pertinent article. So that's really neat. I think it works very well on our platform. And like I said, in the appendix, there's a lot of really nice things in here, uh, such as a control group cross-reference table, as well as an attribution table, so you can kind of do some really quick checks of attribution or what have you. And then real quickly, in the Form 5500 product, we have all the various instructions for the schedules, and even down to, for instance, on the 5500 form under detailed instructions, you can go to a specific line, see the instructions for that line, and not only do we show you the instructions, but we give you the format description. That'll just pop up on your screen, and we'll also give you the edit check error messages that you get back and what they mean. So that's built in, real easy to use. Again, you can open this just like a book, or you can search it. But obviously, if you're working on a Schedule H or a Schedule C, you can go right to that schedule and look at the specific instructions or anything definitional that you might have a question about. So that's it. I appreciate you all staying online for the quick demo, and I know you hopefully got something out of the presentation by Derrin. Thanks for attending. Have a great day. And if there's anything we can do to help you out, give you your own specific personal demo or maybe a free trial to the service, we'd be glad to do that. Just contact us at support@aristopedia.com or go to our website. There's a way to sign up right there. Click and call. It's easy as you can do it. Thanks, everybody, and have a great day and have a great weekend.